Please welcome Commissioner Maureen Ohlhausen, please.
Well, thank you, Randy, for that nice welcome, and thanks to the Free State Foundation for inviting me to speak today. Randy, you and your team do a great job in advocating on important technology policy issues, and I'm honored to participate in today's thoughtful discussion on the future of communications regulation. At the Federal Trade Commission, protecting consumers and competition on the Internet is a substantial and growing part of our work. And I have some specific ideas on the FTC's future role. After introducing the work of the FTC, I'll make 3 points today. First, to protect consumers effectively while promoting innovation, regulators must embrace regulatory humility and focus on consumer harm. Next, the recent Verizon decision is an example of the difficulties of using prescriptive ex-ante rulemaking to regulate a dynamic industry. The Greek myth of Procrustes and his iron bed is instructive here, as I will explain further in my remarks. And then finally, reformers should look to the FTC's successful evolving approach to Internet-related issues, including its ex post enforcement of basic competition and consumer protection rules. So first, a little background on the Federal Trade Commission. The FTC's mission is to, quote, prevent business practices that are anti-competitive or deceptive or unfair to consumers, to enhance informed consumer choice and public understanding of the competitive process, and to accomplish these missions without unduly burdening legitimate business activity, end quote. For a century, the FTC has pursued this mission under Section 5 of the FTC Act, which authorizes the Commission to prevent unfair methods of competition and unfair or deceptive acts or practices. These dual competition and consumer protection mandates are intentional. Competition and consumer protection laws are complementary tools, and both help to promote vibrant competition that benefits consumers, or vibrant markets that benefit consumers. Congress charged the FTC with carrying out this competition and consumer protection mandate across nearly all segments of the economy, including the vast majority of commercial activity on the Internet. And the FTC also enforces several issue or sector-specific laws, such as the Children's Online Privacy Protection Act and the Telemarketing Sales Rule. This broad jurisdiction means that the FTC and the Federal Communications Commission share jurisdiction over much of the Internet ecosystem, with one significant exception that I'll discuss later. Whether at the FTC or the FCC, all regulators of technology should embrace two fundamental principles. One, regulatory humility, and two, a focus on evaluating consumer harm. Unless regulators follow these two principles, even agencies with the best designed statutory and regulatory structure will be less effective and possibly make consumers worse off. On the other hand, regulators who embrace these principles can help limit harms caused by the flaws that exist in all regulatory approaches. Practicing these principles is particularly important when the area to be regulated is rapidly changing and difficult to predict. It is exceedingly difficult to predict the path of technology and its effects on society. The massive benefits of the Internet have, in large part, been a result of entrepreneurs' freedom to experiment with different business models. The best of these experiments have survived and thrived, even in the face of initial unfamiliarity and unease about the impact on consumers and competitors. For example, you may remember the early widespread skepticism directed toward online shopping. But today, let me ask, how many of you bought something online this month? Yes, me too. Early skepticism does not predict potential consumer harm. And conversely, as the failure of thousands of .coms has shown, early enthusiasm does not predict consumer benefits. Because it is so difficult to predict the future of technology, government officials like myself must approach new technologies and new business models with a significant dose of regulatory humility. And this means we must work hard to educate ourselves and others about new developments. We must research the effects on consumers in the marketplace. We must identify benefits and any likely harm. And if harms do arise, we must ask if existing laws and regulations are sufficient to address them, rather than assuming that new rules are required. And we must remain conscious of our limits. The success of the information economy means that we regulators can now gather so much data. But data isn't knowledge or wisdom. Data-driven decisions can be wrong. Even worse, data-driven decisions can seem right while still being wrong. Political polling expert Nate Silver notes that one of the pervasive risks that we face in the information age is that even if the amount of knowledge in the world is increasing, the gap between what we know and what we think we know may be widening. And regulatory humility can help narrow that gap. Equally important, we ought to focus on evaluating consumer harm. Before intervening, regulators must understand how new technologies and business models affect consumers, both positively and negatively. This requires careful factual and economic analysis. It also serves as another check on action for the sake of action. As noted in the FTC at 100 report, which I played a large role in, the improvement of consumer welfare is the proper objective of the agency's competition and consumer protection work. Our consumer protection laws encourage us to focus on consumer harm, whether the cause is from deception or unfairness. So in analyzing a potentially deceptive practice or omission, the FTC asks if the deception is material. That is, absent the deception, would the consumer have made a different choice? As explained in our deception statement, if different choices are likely, the deceptive claim is material, and injury is likely as well. Thus, injury and materiality are different names for the same concept. The FTC's unfairness statement relies even more explicitly on harm. It deems a practice unfair if it causes substantial harm, which is not outweighed by any offsetting consumer or competitive benefits, and the consumer could not have reasonably avoided the harm. The FTC's unfairness statement specifically identifies financial, health, and safety as varieties of harm the Commission should consider substantial, and further states that emotional impact and more subjective types of harm will not make a practice unfair. I believe that these clear statements as to what constitutes consumer harm have focused the FTC and made it more effective than it would be, for example, under a less specific public interest standard. When the FTC exercises its competition authority, it also carefully evaluates consumer welfare or its corollary consumer harm. The core mission of antitrust law is to improve consumer welfare by protecting vigorous competition and economic efficiency. The FTC has expressly acknowledged that its dual consumer protection and competition mandates are bound together by this single objective of improving consumer welfare. This is in part why I have said that consumer welfare must be among the guiding lights for the FTC to apply its Section 5 authority to cases outside the reach of traditional antitrust laws. In such cases, I've argued that before taking action, the FTC ought to establish substantial harm to competition or to the competitive process, and thus to consumers, relying on robust economic evidence that the challenged conduct is anti-competitive and reduces consumer welfare. By focusing on practices that are actually likely to harm consumers, the FTC has limited its forays into speculative harms, thereby preserving its resources for clear violations. I believe that this self-restraint has been important to the FTC's success in tackling a wide range of disparate problems without disrupting innovation. And I think that this is a model worth replicating. So regulatory humility and a focus on evaluating consumer harm are both necessary to successfully protecting online consumers and competition. However, regulators also need the proper tools for the job. Although the FTC and the FCC share jurisdiction over the Internet, the tools they use are very different. The FCC has traditionally regulated the communications industry using prescriptive ex-ante regulation. The Communications Act and subsequent legislation established a system of classifications for various telecommunications providers or services. And within that silo structure, the FCC has generally conducted Administrative Procedure Act rulemakings that classify entities as falling within a specific silo and then detail the procedures that these various types of entities must follow. So Friedrich Hayek, who spent a lot of time exploring the interaction between laws and liberty, would call these types of rules commands or rules of organizations, as distinct from rules of spontaneous order, such as common law, that arose organically and evolve over time. I believe that the prescriptive ex-ante approach is not well suited to regulating the rapidly evolving Internet. Prescriptive ex-ante regulation faces at least three significant knowledge-gathering challenges. First, a regulator must acquire knowledge about the present state and future trends of the industry being regulated. The more prescriptive the regulation and the more complex the industry, the more detailed the knowledge the regulator must collect. Second, collecting such information is very time-consuming, if it's even possible at all, because such knowledge is generally distributed throughout the industry and may even be latent. Third, as a regulated industry continues to evolve, collected knowledge can quickly become stale, and this is a particular concern for fast-changing technological fields like telecommunications. Now, these knowledge problems can lead to negative consequences. First, because statutory, procedural, and resource constraints make it impossible for the regulator to continually update the rules, it's difficult for ex-ante regulation to keep up with technological change. Now, these problems may not be as acute if the regulated industry is evolving slowly over decades. But in the Internet ecosystem, which is rapidly innovating and evolving, a prescriptive ex-ante approach has resulted in significant mismatches between the rules and reality. Second, because ex-ante regulations are an attempt at the almost impossible task of predicting the future, some harms will occur that weren't anticipated. Simultaneously, regulations may prevent harmless or even beneficial practices. And third, prescriptive ex-ante regulations can hinder innovation. For example, if an innovative new project or service doesn't easily fit within a particular statutory or regulatory classification, the innovator may be uncertain about how to comply with the law. Such legal uncertainty exacerbates the already risky effort to develop something new, which ultimately discourages innovation. So in short, prescriptive regulation, particularly of fast-changing industries, risks becoming Procrustean. So let me explain what I mean by that. In Greek mythology, Procrustes was a rogue blacksmith, a son of the sea god Poseidon, who offered weary travelers a bed for the night. And he even built an iron bed, especially for his guests, and that sounds very nice and welcoming. But there was a catch. If the visitor was too small for the bed, Procrustes would forcefully stretch the guest's limbs until they fit. If the visitor was too big for the bed, Procrustes would amputate limbs as necessary to fit them into the bed. Now, eventually, Procrustes met his demise at the hands of the Greek hero Theseus, who fit Procrustes to his own bed by cutting off his head. Now, the general lesson of Procrustes is a warning against the tendency to squeeze complicated things into simple boxes, to take complicated ideas, technologies, or people, and force them into our preconceived models. As Nassim Taleb points out in The Bed of Procrustes, his book of aphorisms, we often do not recognize this backward-fitting approach, or sometimes even kind of proud of our cleverness in reducing something complicated to something simple. Now, regulatory humility counsels embracing the lesson of Procrustes. Regulators should resist the urge to simplify. We should make every effort to tolerate complexity and develop institutions that are robust in the face of complex and rapidly changing phenomena. Unfortunately, due to the limits of knowledge, regulation too often is a Procrustean bed for the regulated industry. When the regulated industry is rapidly evolving, yesterday's comfortable regulatory bed quickly becomes a torture rack for tomorrow's technologies. In particular, the history of telecommunications regulation is largely a story of regulatory attempts to fit new technologies into an out-of-date regulatory model. From the 1913 Kingsbury Commitment to the 1996 Telecommunications Act and its subsequent implementation, Congress and the FCC have constructed a bed of regulation that makes distinctions based on physical platform, business model, and geographic characteristics that are increasingly irrelevant. Consequently, when considering the converging technologies and overlapping business models of an IP-based world, the FCC has struggled to deploy its prescriptive ex-ante regulation tool in a legally sustainable manner. The Procrustean Title II bed simply doesn't allow the FCC much flexibility. The Verizon versus FCC decision and the underlying open internet order together provide a fascinating example of the inflexibility of the ex-ante approach. In a 2002 declaratory ruling and several subsequent decisions, the FCC determined that broadband internet service was an information service and was therefore not subject to Title II common carrier regulation. In other words, the FCC decided not to subject broadband internet services to the Procrustean bed of Title II regulation because it just didn't fit well. But fast forward to 2010, where in the open internet order, the FCC established 3 requirements on broadband service providers: anti-discrimination, anti-blocking, and transparency. And as you all know, the DC Circuit recently struck down these rules in part. The court found that by imposing anti-discrimination and anti-blocking rules, the FCC was impermissibly treating broadband services like common carrier services. So returning to our gruesome Greek metaphor, it was as if the FCC had said, broadband providers, we're not going to force you into a Title II regulatory bed, but we're going to trim some of your limbs, and never mind that these are some of the same restrictions we would impose if we were going to force you into Title II. The upshot of the court's decision is that to impose anti-blocking and anti-discrimination rules, the FCC would have to reclassify broadband as a Title II common carrier service. That is, force it into the Title II bed, no matter how badly it fit. Net neutrality is not the only internet issue where technological change is exposing flaws in the ex-ante approach. Voice over Internet protocol is another good example. Now, VoIP is a broadband-based telephone services. And to the consumer, VoIP looks nearly identical to the traditional voice service that the FCC has regulated as a common carrier since its earliest days. Yet, although the FCC has imposed certain regulations on VoIP, the FCC does not regulate VoIP as a common carrier service. And the FCC has not acted on a long-pending rulemaking proceeding posing the question of whether VoIP is Title II common carrier service. Now, I don't raise this to encourage the FCC to regulate VoIP under Title II, but rather to emphasize that the ongoing VoIP transition will continue to push difficult issues like this to the fore. Given that the prescriptive ex-ante regulatory approach faces such difficulties, what's the alternative? For consumer protection and competition issues, I have significant experience operating within the model we use at the Federal Trade Commission. The FTC model is quite different from the FCC's. Instead of a siloed statute, Section 5 charges the FTC to prevent and punish unfair methods of competition and unfair or deceptive acts or practices. The Act applies across all industries with a few exceptions. And where the FCC's regulations generally set the boundaries of what certain types of entities can do, the FTC's statute fences off deceptive and unfair practices for all entities, but generally permits everything else. The FTC's process is an enforcement-centric rather than a rulemaking-centric one. And as such, it is ex post rather than ex ante, and case by case rather than one size fits all. And because an enforcement action requires a complaint and a case to move ahead, the FTC's method typically focuses on actual, or at least specifically alleged harms, rather than having to predict future harms more generally. Because of these structural differences, the FTC's enforcement process is less effective by the systemic knowledge problems of the FCC's prescriptive ex-ante rulemaking approach. So first, rather than having to collect detailed knowledge about an entire industry, the FTC only need gather enough information about the specific parties to the dispute and their behaviors in the relevant market. And the FTC has significant investigatory authority to gather such information. Second, collecting such information is much simpler because the vast majority of that information will be in the hands of the parties to the case. And third, even in rapidly changing industries, the FTC's decision on a case will bind only those parties to the specific case. Now, the case will have precedential value, but when the FTC weighs that precedent in future cases, it can then consider any changes in the underlying facts. Thus, the FTC's approach facilitates what Adam Thierer calls permissionless innovation, or the anti-precautionary principle, better than a prescriptive rulemaking approach. And the proof, as they say, is in the pudding. As the Internet has become an increasingly integral part of society, the FTC's enforcement-centric approach has enabled it to serve an increasingly large role in protecting consumers and competition online, even while the industry has continued to innovate. So in fact, the FTC is already addressing major Internet-centric concerns, including new issues in privacy and fraud and advertising and other consumer protection issues, along with competition issues. Perhaps the most significant Internet issue that the FTC has tackled is privacy. The FTC leads the federal effort to protect the privacy of consumers online. Now, online privacy is a very wide-ranging topic covering spam, email, and data collection and security, the safety of children, and online advertising. And hot new topics include the Internet of Things and big data. And the FTC has been active in all of these areas, using a full range of tools, including enforcement, consumer and business education, policy research, and convening stakeholders for a discussion. So, for example, the FTC has brought a wide range of enforcement cases addressing consumer harms related to the Internet, including more than 100 spam and spyware cases and 50 data security cases. And we've brought these cases against a wide range of defendants, including an international hotel chain, a major data broker, a national drugstore chain, and the social media site Twitter. And we also hold companies to the promises they made in their privacy policies, and have brought actions against companies such as Google and Facebook for violating these promises. And additionally, we've brought over 20 cases to enforce the Children's Online Privacy Protection Act, and we've collected more than $7 million in civil penalties. And I believe that this strong enforcement record reflects the FTC's readiness and capability to protect consumer privacy online, even in the face of technological change. So enforcement is a cornerstone of our activity to protect consumers online, but it is supported by a wide range of other complementary tools that the FTC uses to promote consumer welfare and competition online, including consumer and business education and policy R&D efforts. So in some respects, the Commission's consumer and business education efforts affect a greater percentage of American consumers than anything else we do. So for example, the information available on our website to help consumers avoid becoming victims of identity theft and then to mitigate the damages of ID theft have had millions of hits and have been distributed very widely in hard copy as well. We also educate consumers on how to avoid falling victim to online scams, how to deal with spam email, how to protect their computers and phones and home networks, and how to keep children safe online, among a variety of topics. And for businesses, we also offer a wide range of legal resources and guidance and handbooks on topics, including online advertising and privacy laws and best practices across the Internet. The FTC also has a strong policy research and development capability that it uses to stay abreast of new technologies and emerging issues. So, for example, the FTC has been closely studying the related issues of big data and the Internet of Things. And we've hosted successful workshops on these topics and others, including disclosures in online marketing and advertising practices, and children's online privacy, and mobile tracking. And future FTC workshops will cover topics such as consumer behavior prediction and analysis and consumer-generated health data. Now, these workshops are particularly valuable because they not only do they educate consumers and businesses, they also help the Commission stay informed about ongoing technological developments and the benefits and risks of any new such technologies. So returning to the Verizon decision for a moment. Although the decision does not explicitly affect the FTC's important role in protecting the Internet consumer, it may have two indirect but important effects. First, the D.C. Circuit did uphold one provision of the Open Internet Order that could assist the FTC's consumer protection efforts. Specifically, the court upheld the order's requirement that broadband service providers be transparent about what they offer. This transparency requirement could provide useful information to consumers, and the FTC can monitor the information provided by broadband service providers to ensure that it's accurate and consistent with their actual practices. And to the extent that we find statements inconsistent with reality, our deception authority empowers us to take action to protect consumers. Second, the D.C. Circuit, while striking down parts of the Open Internet Order, did accept the FCC's assertion that it has independent authority under Section 706 of the Communications Act. Now, the partial dissent in Verizon raises significant and legitimate concerns regarding the majority's interpretation of the FCC's 706 authority. And on its face, the scope of this authority would appear to be bounded only by the FCC's creativity in connecting its proposed regulatory action to the promotion of broadband deployment. Now, there's a lot of uncertainty about the extent of the FCC's 706 authority, but it does appear that a particularly aggressive FCC could assert overlapping jurisdiction with the FTC on Internet consumer protection issues. For the reasons I've already discussed, I believe that the FTC's enforcement-driven, case-by-case approach is much better suited to the fast-changing Internet world, and therefore I counsel caution in adopting other prescriptive rules in this area. So with our array of enforcement and education and research tools, the FTC is well equipped to advance its competition and consumer protection mission online, even in the face of constant change. But this isn't to say that the FTC is perfectly equipped. There is one significant change that should be included in any update to the communication laws. Common carriers should no longer be exempt from FTC oversight. So although the FTC and the FCC share jurisdiction over much of the Internet marketplace, common carriers are exempt from FTC jurisdiction. Now, in the prior era of separate regulatory silos of communications channels, this may have made sense. But today, common carriers and non-common carriers compete directly in a number of markets. And the common carrier exemption to our jurisdiction means that these competing technologies face disparate regulatory regimes through an accident of history. And this exemption also frustrates effective enforcement with respect to a wide variety of activities, including privacy, data security, and billing practices, and should be removed. So, just to sum up, I wanted to thank you for your attention today. And now I know a lot of energy will be spent over the next several years looking at how we can reshape our communications laws. I hope that during this process, legislators and regulators will embrace regulatory humility and focus on evaluating and addressing consumer harm. And further, I urge all of you to reflect on the demonstrated challenges of using prescriptive ex-ante approaches to regulate a fast-evolving technology like the Internet. And I believe the FTC's successful ex-post enforcement of competition and consumer protection rules provides a useful template for protecting Internet consumers. And I look forward to working with all of you and with Congress to update our laws to serve consumers better. Thank you.
Wonderful. Can you take a couple?
Sure,
Let me
happy.
just say something
Yes.
first. Well, Maureen, thank you so much for that. That was a very substantive address, and I think an important address, so I appreciate that. I just want to say two quick things. Then we're going to take, in keeping with the tradition before we adjourn for the day, I'll take a couple questions, and Commissioner Ohlhausen has graciously agreed to answer those. But first I want to say, I'm going to make a confession, and I'm probably a minority in the room, but I didn't know who Pro-Crusties really was. I didn't know the myth, and we always refer to that. So I thank you for that, and I'm much better educated now. Secondly, I'd like to say, I hope you don't take this personally, but I wish we could clone you actually, and then put one of you over at the FCC if an appropriate occasion should arise over there as well. Now, I want to just remind you that we can continue the conversation on Twitter at hashtag FSFCONF. I hope you'll do that, and so we can keep the conversation and ideas going as well. So I'm going to see whether we have a couple of questions. If there is someone that hasn't asked a question, I'm going to give them first dibs, and then if that's not the case, you might be able to be a repeat offender. So do I have any questions? Okay, well, I've got one right back in the back, and just please state your name for the record, and then ask a question.
Thank you. Earl Comstock with Eckert Siemens. Question for you. I thought that was a fascinating presentation, but obviously there's more to the Communications Act than just looking at some of these things, and I'd be curious. I didn't take it that you were suggesting, or I'd be interested in hearing how your agency's authority would allow you to address issues like universal service, access to networks in the first place. For example, what if a broadband provider said, you can't attach devices that aren't approved by me? That's the kind of ex-ante regulation that actually led to the creation of the internet, was obligations to allow attachment of devices that met certain standards without qualification. And for example, in cable networks today, you don't see that. So I'd be curious how your agency's authority would be able to address things like that.
So the FTC wouldn't be addressing issues like universal service, right? That is not a competition or consumer protection kind of issue. That's another basically policy goal that you would need a different approach to. But for example, obligations of broadband service providers more generally towards consumers. Initially, it made sense when you have a monopoly provider to have a more pervasive regulatory structure to control how they deal with consumers, because consumers don't really have another choice, right? If they don't like that, they don't have anywhere else to go. But one of the strongest things that we've seen in this area is a move towards greater competition and greater choices for consumers. So I'm not sure it makes sense anymore to have these very prescriptive regulations when you have a market system that may provide different options for consumers. So for example, if a broadband provider were to do that, if they were to try to impose this on their subscribers, I think those subscribers would have a pretty strong incentive to say, well, who else is offering this service? I don't like this. I'm going to use wireless, or I'm going to use, some other broadband provider. So to try to design rules for issues that are unlikely to arise in a competitive market, to me doesn't make a whole lot of sense. So that's how I would answer that. I think first we need to look at, is this something likely to happen? And then if it is likely to happen, do we already have the tools available to address those kind of concerns, such as the antitrust laws and the consumer protection laws? So if a provider said, oh, you can do what you want, and then they don't actually adhere to that promise, that's a fairly straightforward deception issue.
Okay. Well, I want to, I'm sorry, I appreciate that, but we're going to, because I've only got the room for a certain amount of time here, so if there's another question over here, if someone else has one, I'll recognize them. Yeah, and anyone else? Barron's had one, but if no one else has one, I'll give him another one. Doesn't look like anyone does. Baron, question.
3 cheers for the Hayek reference. So what to you is the essence of the common law? Is it case by case, or is it something more than that that happens in each case?
Well, certainly we have, right, our basic principles: unfair and deceptive acts or practices, unfair methods of competition, and and it's important for the FTC to articulate, I think, generally what those mean. So we've got a deception statement and we have an unfairness statement on the consumer protection side. And as you, Baron, probably know, and I don't know if others do, using unfair methods of competition, the authority of the FTC, I've said we need to have a similar statement saying what does that mean generally. But then as you apply it to evolving facts, that's, I think, kind of where the common law comes in, where you start saying, okay, well, what does that mean when you're talking about online advertising? What does that mean when you're talking about a new technology? And we kind of apply it in an ongoing way that way. What's the kind of harm we should be addressing? That's what we talked about in the unfairness statement. What's substantial harm? Things like that. So I think that over time, it's much like how a court would apply a general statute to the facts at hand. So I think that's kind of what our role should be, rather than to try to get in ahead of time and forecast what all the problems may be, and to create a rule that controls business behavior to forestall all of those problems.
Okay. Well, first of all, I just want to thank all of you for coming before I thank Commissioner Ohlhausen again. As I said at the beginning, this was our 6th annual Free State Foundation Telecom Policy Conference, so we're certainly already looking forward to thinking about the next one and our events, by the way, in between, our seminars and other events. So Commissioner Ohlhausen, I've got, as a token of our appreciation, a Free State Foundation. That's a blanket. It may come in handy today. Now, Commissioner Clyburn and Commissioner O'Reilly, I think, both took theirs. I said at the outset of the conference with Commissioner Clyburn that they only cost $14, despite how nice they look. So hopefully that fits within any restrictions over there at the Federal Trade Commission. But I want to thank you again for a very, very substantive and important talk. Thank you, and this concludes our session.